Skillz stock is down 92% year to date in 2022. But is the stock a buy for 2023? I'm going to answer that question by the end of this video, so stay tuned. I'm going to look at a few different metrics to determine if Skillz stock is a buy going into 2023. The first one I'm going to look at is revenue growth, quarterly year-over-year revenue growth. And I have it going back here until before May of 2021. You saw during 2021, Skillz was growing nicely on the top line, close to 100% revenue growth. But that has steadily declined as economies have reopened and people are spending less time at home engaging with the mobile platform, playing games against each other. And most recently, revenue actually decreased by 41% year over year. That's extremely troubling for Skillz to, be decreasing, to have revenue decreasing at such a rapid rate, especially because the company is losing so much money on the bottom line. Typically, what you see with companies that are not profitable on the bottom line are experiencing healthy growth on the top line. Skillz gives you losses on the bottom line and it's also giving you declining revenue growth. The next metric I look at is the actual quarterly revenue for Skillz. And I have that in the purple, and then in the orange, I have Skillz sales, general and administrative expenses, the bulk of which is just sales and marketing. And I wanted to show this because it's interesting to me that just the SG&A expense alone for Skillz has consistently been above revenue, right? Look at the orange, that's the expense, that's the sales and marketing expense. Look how much higher that is from revenue, and that worsened in starting 2022 as maybe management was really trying to fuel growth as organic growth was slowing down. They were really trying to induce some kind of revenue growth, so they spent more money on advertising, spent more money on promotions for players to come back or maybe engage more with the platform. And so far, this strategy has not worked. If you've been following my videos, if you've been reading my articles at the Motley Fool, you will have realized I've been saying this for several quarters now that, maybe it's time management tries a different strategy to get some growth going for this company. The marketing and promotion angle isn't delivering the kind of return on investment that seems to be at least enough to compensate for how much they're spending. And that's evident by the stock price decline of so much in 2022. Investors are not liking the results they're getting. So, of course, as you have losses on the bottom line, you're going to have negative cash flow from operations. And they have turned it around, so kudos to them in the most recent 2 quarters. Cash flow from operations, it's still negative 21.77 million, but it's not as bad as it was during the peak loss period when it was close to 90 million and it was trending consistently downward. At least it's turned upward, and hopefully investors see continued progress and they can turn this thing around and start generating cash flow from operations instead of being consistently negative. All right, finally, what I will look at is the valuation. And since it's negative cash flow from operations, negative earnings, I chose to use the price to sales ratio. And the stock is trading at a price to sales of 0.713. That's way below the peak valuation over 45 it was trading for during its peak in 2021. But I would argue it should never have gotten to that valuation. That was a bit too optimistic for this company. And I can't even tell you if a price to sales ratio of 0.7 is inexpensive or if it's cheap. I can't even tell you that because I don't know how much more its sales growth is going to keep falling as the company brings down its sales and marketing expenses. And it can't continue spending so much on sales and marketing because it's eventually going to run out of cash. It needs to decrease that sales and marketing expense. And as it does that, it's going to cause revenue to slow down and decrease further. I don't know how much lower that's going to go. So I don't know if I'm paying, I'm paying a price to sales right here for a certain amount of sales right now, but that sales, the numerator may drop considerably. That the denominator might drop considerably, and so this valuation could change because the denominator is falling. So even though the numerator might stay stable or decline a little bit, the denominator may be falling even faster than that. So uh, I'm really skeptical with companies that are losing so much money on the bottom line. You may have heard me say this before in some of my other videos with companies like Skillz that are, operating with so much with such negative losses, with such great losses, both in terms of profit and cash flow. So, long story short, to answer the question, is Skillz stock a buy for 2023? No. No, the answer is no. The stock is not a buy for 2023. I'm going to need to see more progress in terms of bringing down that sales and marketing expense and then evaluating where the company is ultimately in terms of sales decreases once the, the marketing expense is brought down to more sustainable levels. All right, so that's all I've got for this video. Thank you for watching. I'll see you next time. I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.